All right. So we're going to get started. We'll go fast enough to try to finish the entire exam. So we're starting at 7:28. If we go till 10, we'll make a deep inroad. So let's get started. Again, we'll just look at the exam. And in this case, we'll be doing the same thing, have one person read loud, and then as soon as somebody spots the question, we answer it. If we need any explanations, we can do that. Again, this is we're going to do the learning mode. Okay, Ms. Ebukun Nolowa, you want to start with this?
Yes. If a healthcare plan has characteristics of an HMO and PPO, what type of plan is it? HMO, PPO, I think it's POS.
Okay. Which is correct.
Okay.
Good to read this. Point of service plans are a combination of HMOs and PPOs. Mr. Oluwatosin, you want to read this?
Sir, under the Fair Credit Reporting Act, individuals rejected for insurance due to information contained in the consumer report.
Is it C?
Is it
Correct.
D?
EBD. Oh yeah, let me first.
It's C.
C, source, yes.
So they're entitled for a copy of the report, not from the party who ordered it, but from the party who provided it.
Mm-hmm.
The
Yes,
party who provided it, but must be informed of the source of the report.
Yes, sir.
I agree.
Correct. We're not going to read the explanations. Let's go ahead. Lola, you want to read this one?
Sorry, sir. What of Miss Geraldine?
I've texted her to join. I don't think she's joined yet.
Okay.
She might be at work. She might be at work. She was off yesterday.
Okay.
Oh, that's true. Okay.
Yeah. But she's gonna join us as we proceed.
Okay, sir.
All right.
Which of the following statement is not true concerning insurable interests as it applies to life insurance?
DSC. A debtor has an insurable interest in the life of the lender.
So
lender, yes. It should be a lender in the life of a debtor.
Of a debtor, yeah, it's supposed to be the other way around.
Yes.
All right, correct. Next.
The question, sir.
Mr. Des, can you read this one?
Doug decided to retire at age 62 when he applied for Social Security retirement benefits. He discovered
B.
You guys are too fast now. Slow
Oh,
down.
I'm
Make I read
sorry.
them.
I'm sorry.
Take it.
Yeah, that's correct.
Correct. Ms. Ebuko Nolowa, you want to read this one? Oh, no, Ms. Lola, you want to read this one?
Another name for substandard risk classification is rated.
Yes. I saw that today. I did something like that today. So
Yeah, there's so many. The one that didn't
That's
fall in
correct.
place.
yes.
Okay. Ms. Ebuko Nolowa, you want to read this one?
Yes, if a life insurance policy has an irrevocable beneficiary designation, C.
C.
With the written permission of the beneficiary.
Correct.
Mhm.
Yes, sir.
Okay. Mr. Oluwatosin, you want to read this one?
Yes, sir. Can a group that is formed from a sole purpose of obtaining group insurance qualify for group coverage? D. No.
Yes.
The group must be formed for a purpose other than obtaining group insurance.
Correct.
D.
So,
Ms. Ebuko Nolowa, you want to read this one?
Yes, the president of a company is starting an annuity and decides that his corporation will be the annuitant. Which of the following statement is true?
the annuitant must be a natural person. Hey.
Correct. An annuitant cannot be a corporation or an NGO.
Yes.
Mr. Desmond, you want to read this one?
A type of policy that can be changed from one that does not accumulate cash value to the one that does is a
Is it convertible term policy?
It's a term policy.
Yeah,
the one that does not
or renewable, one of the two.
A.
Oh,
Is
The
it a
type of
term
policy
policy?
that can be changed from one that does not accumulate cash to one that does is?
Is a term policy, right?
Yes, but
Yes.
There are three
Whole
terms.
life,
there are three
all
term
are
policies
term
there.
policy. Whole life policy is the one that can accumulate cash value. And
Decreasing cannot be changed because as you are paying your debts,
yeah.
yes,
that
to
one
zero.
is decreasing.
Yes, diminishes with the that's true.
So which one do we think is the answer?
So
Convertible.
the question is convincing a bit to me.
It's not confusing. The type of policy that can be changed from one that does not accumulate cash. So which of these policies do not accumulate cash? Decreasing term does not, convertible term does not, renewable term does not. We eliminate decreasing term because we know that you cannot convert it.
Yes, sir.
So we are now left with convertible term and renewable term. But the word there says it, convertible term.
Convertible.
Okay. Okay.
Ms. Lola, you want to read this one?
The Patient Protection and Affordable Care Act include all of the following provisions, except I don't know if it's D or A. Individual tax deduction.
Protection.
They do tax. Hey,
Yeah,
they do tax. What is it called? I know that if you use Obamacare, they will take from your. I don't know how to explain your tax.
Just know that generally, premiums for policies are not tax deductible unless they are paid by a corporation.
Is it C, coverage for preventive benefit? Oh, except, I'm sorry.
That's
No lifetime.
No life dollar limit.
No life dollar limit.
So that sounds odd to me.
It's either A or D.
Yes, sir.
Individual tax deduction for premium bet.
It's not tax deductible. The premiums are not tax deductible, right?
No, they are not.
Yes, should
No.
not.
It's A or D. Let's
F.
just pick one and then we'll learn. I'll go with
Yeah.
individual tax deduction on premiums paid because I don't think the premiums are tax deductible.
Possible.
And that's
Yeah.
correct.
Yeah.
So we know that for Obamacare, there are no lifetime dollar limits. That's something we want to learn from this question. Any questions?
Let me
Go ahead.
go through the rationale, sir. Oops.
Okay.
No.
Ms. Ebuko Nolowa, you want to read this one?
Yes. A medical expense policy that establishes the amount of benefits paid based upon the prevailing charges which fall within the standard range of fees normally charged for a specific procedure by a doctor of similar training and experience in the geographic area is known as the medical expense policy.
Medical expense policy establishes the amount of benefits
In
paid
the
based
Is
on
it not
the
usual?
papers.
The medical expense policy
Oh.
establishes the amount of paid based upon the prevailing charges, which falls within the standard range of fees normally charged.
Normally charged.
That's the usual customary and reasonable now.
Okay, let's go with that. Correct. Mr. Desmond, you want to read this one?
An association could buy group insurance. An association could buy group insurance for its member if it meets all of the following requirements, except
Holds annual meetings. Wait, except has at least 50 members.
is contribute. Association must have a constitution and a bylaw.
They must hold annual meetings.
They must have at least.
They must also contribute for their premiums.
It can be contributory or non-contributory.
Contributory or non-contributory, yes.
But
Is it about 50?
But that 50 members, I know we don't usually talk about 50.
50 members,
like
yes. It has to have at least 20 people.
Any amount
20.
of 20.
Said at least.
We have like less than 100. We have the small business.
Mr. Valentine, what do you think?
So we are left with C or D.
Yes.
Oh, we know that D they can be contributory or non-contributory. So we'll go with C.
Good reasoning?
Yes. Okay, at least 100 members. Okay.
The group must have at least 100 members, okay? Mr. Oluwatosin, you want to read this one?
Which of the following is considered a presumptive disability under a disability income policy? Loss of 2 limbs, loss of 1 eye, loss of 2 limbs.
Loss of 2 limbs, yes.
Yeah, 2 limbs.
Okay.
Correct. Ms. Lola, you want to read this one?
If a business owner becomes totally disabled, a business overhead expense policy will pay all of the following except loss of the owner's income.
D.
D.
Paid rent, employee utilities, yes.
Correct. Mr. Des, you want to read this one?
A policy will pay the death benefits if the insured dies during the 20-year premium paying period, and nothing if death occurs after 20-year period. What type of policy is this?
A. I think.
You attempt to specify age.
I know it's a term.
It's a term
I don't know
policy.
if it's a level term or a term to specify the
Or
age.
limited pay whole life. Because under limited pay whole life, so you can have 20 pay, 65 pay.
But you pay for that amount of year, but
So,
it's still covered, right?
limited pay whole life means you pay for 20 years or up to age 65. That's not what this question is saying.
Yes. So it's between
Ordinary life policy, we want to junk that. So it's a term policy. Is it a term to specified age or level term?
Specify age.
A.
Which is not whole life then.
Is there any age that is specified
no
in that
age
question?
Okay, level term. It's because of the 20-year, but that's not the age of the.
No, that's not the age of the what's it called, insured.
No. It's a level term, please. Level term.
Correct.
So sorry.
Mr. Oluwatosin, you want to read this one?
I have to be raising this thing in details. If an agent wishes to sell variable life policies, what license must the agent obtain?
D.
Security, both life and security licenses, but D.
Securities.
Yes.
Remember, you're supposed to read only the
answer.
Only the right answer.
Yes, sir. That's what I'm saying. I'm just saying that they omitted a part of the life.
Okay.
Yeah, can have life insurance and security.
Correct. Mr. Des, you want to read this one?
Which is true regarding obtaining underwriting sources? Which is true regarding obtaining underwriting sources?
D.
D.
The applicant must be informed of the sources contacted and how the information is being gathered.
Correct. Ms. Lola, you want to read this one?
The death benefit under the universal life option B.
Okay. D remains level. D.
The death benefit is option A that remains level.
Okay, option B increases.
I think so. Gradually increases each year. Maybe it's B.
B, yes. Both death benefit and cash value increases. Yes, that's true.
That's correct.
Yes.
Option A, the death benefit is level. option B, the death benefit increases gradually. Mr. Oluwatosin, you want to read this one?
Yes, sir. An insured long-term care policy is scheduled to pay a fixed amount of coverage of $120 per day. The long-term care facility only charge $100 per day. How much will the insurance company pay?
It's 120.
120.
Because
And the
It's a fixed amount, yeah. 120, yeah, that's true.
Right.
So who gets the rest of the $20?
It goes to the insured.
Okay.
The benefit thing.
Yeah. Ms. Lola, you want to read this one?
Medicare Part A services do not include which of the following?
This people? Gotta teach you to do a pyjamas. Gotta teach you a pyjamas.
A, hospitalization, post-hospital. Is D.
D now.
Is D.
Nursing care facility.
Hospital skilled nursing facility.
Outpatient.
Outpatient hospital treatment.
Yes. Oh.
Outpatient treatment is covered under Part B.
Part B.
Okay.
Mr. Oluwatosin, you want to read this one?
Yes, sir. Part 2 of the application for life insurance provides questions regarding all of the following except other insurance coverages. B. B, sir. Other.
Okay, let me.
It contains the health history, alcoholism, surgery, surgery.
That's correct.
Part A that contains coverages. This part.
Ms. Ebukun Nolowa, you want to read this one?
Yes. If a business wants to buy a disability income policy on a key employee, which of the following is considered the beneficiary? Is the employer?
Employer D.
Correct.
Which of the following statement is true concerning whole life insurance? Which of the following statement is true concerning whole life insurance?
I know A. Lump sum death benefit.
Lump sum is not taxable.
Right. Miss Lola, you want to read this one?
The policy owner of an adjustable life policy wants to increase the death benefit. Which of the following statement is correct regarding this change? Do we do elimination?
Yeah, silently.
Adjustable life.
Adjustable. Is it A?
B?
I go for A.
How about D?
It's not between. It's between A and B. I'm thinking.
Then I'll go for A if it's between A and B.
I'm thinking. I may not
It's B.
Let's see what Oga
Mr. Des is right. They say adjustable life policy. They did not say that that policy has the guaranteed insurability rider. It is only when the policy has the guaranteed insurability rider that they will not need evidence of insurability. But if it's just an adjustable life policy and they want to adjust their death benefit, at that point that they're adjusting, they might also need evidence of insurability. Ms. Ebuku Olowa, you want to read this one?
Yes. The relation of earnings to insurance provision allows the insurance company to limit the insured's benefit to the insured's average income over the last, is it 12 months? I'm not sure.
12 months, I would think. Uh-oh.
4 months.
Okay.
Why 24 months?
The relation of earnings to insurance allows the insurance company to limit the insured's benefit to the average income over the last 24 months.
Wow.
That's what they say.
2 years?
Yes.
Is that, have you seen that as you are writing the policies, Mr. Valentine?
Usually they ask for your current income. That's what they usually ask.
They usually do not state the period of time.
Yeah, they do not ask for 2 years, they just ask for your current income.
Okay, at least we can now deduce.
Yeah, so Ms. Ebuku Olowa, you want to read this one?
Yeah. The type of settlement option which pays throughout the lifetime of 2 or more beneficiaries is called joint and survival.
Correct.
D.
Mr. Oluwatosin, you want to read this one?
Okay, sir. An annuity holder is planning to retire. She has accumulated $100 in a retirement annuity and now wants to select the benefit option that will pay the largest monthly amount for as long as she lives. Which
Straight
of the
life.
following?
Okay, sorry.
Yeah, straight life. That's straight. Hey, pure life, straight life.
Straight life. Sorry, I didn't let you finish.
No.
No, that's okay. When you see a low-hanging fruit, you harvest it fast and you move on. Mr. Des, you want to read this one?
Annually renewable term policy provides a level term benefit for a premium that
increases annually.
That increases
annually.
Does it decrease or increase? It should increase.
It's increase.
Increase.
Yes, attain H.
Correct. Increases annually. Ms. Lola, you want to read this one?
The life insurance policy clause that prevents an insurance company from denying payment of a death claim after a specified period of time is known as the incontestability.
C.
Correct. Mr. Des, you want to read this one?
Hospice care is intended for terminally ill.
Correct. Ms. Ebuku Noloa, you want to read this one?
Yes. What license or licenses are required to sell variable annuities?
Security only.
That's
B.
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 Both life insurance.
Security and
Security.
yes, life insurance.
That was what I was trying to say the other time. Let's mention security.
Correct. Mr. Oluwatosin, you want to read this one?
Okay, sir. A policy fails to pay the premium due to its whole life policy after grace period passes, but the policy remains in force. This is due to what provision? Automatic premium loan? Yes.
Yes.
It's
Correct.
using the cash value to
pay for it.
Yes.
Correct. Next, Ms. Ebuku Noloa, can you read this one? Let me adjust the screen.
Okay. An insured purchased a 15-year level term insurance policy with a face amount of $100,000. The policy contained an accidental death rider offering a double indemnity benefit. The insured was severely injured in an auto accident and after 10 weeks of hospitalization died from the injuries. How much will the beneficiary receive from the policy?
100. Hey,
Is it
because
just 100 or double?
yes, double indemnity. It has accidental death rider of double indemnity benefits.
How long, what this question is asking is, how long should this death occur after the accident for the death to have been as a result of the accident?
It says 10 weeks. It's 10 weeks up to
It's
It's
either
not,
60
it's
days.
not up to the, what's it called?
It's either 60 days or 90 days.
So 90 days. So 10 weeks is not up to 90 days there.
No, 10 weeks.
10 weeks is 70 days.
It's either 60 days or 90 days. Let's pick A and we'll find out.
It should be that 100.
Okay, well, let's see. Oh,
Yeah, so
it's double.
So it was double.
So it's 90 days. So you have to die within 90 days.
Oh,
so remember that.
Mm-hmm.
If you have an accident, you have to die within 90 days for it to have been considered as a result of the accident. Because for your double indemnity or triple indemnity or accidental death benefit rider to kick in, you have to have died within those 90 days.
So if the person does not die within the 90 days, you get the face value?
You get the face value, correct.
They'll pay the face value.
That's 100.
Yes,
okay.
That's 100.
Okay.
But this was under the 90 days, right? It was about 70 days.
That was 70
correct,
days.
correct.
Okay. But it passed 60.
Correct. Ms. Lola, you want to read this one?
Which of the following riders will not increase the premium for a policy owner?
Impairment rider, C.
Impairment.
Yeah.
There you are.
C.
C.
We saw it yesterday, right?
Yes, sir.
Let's read that question again. Which of the following riders would not increase the premium
for a policy? C.
C.
Impairment riders.
Correct. Welcome to class, Ms. Geraldine.
When did the class start?
7.
Oh, I thought 8 o'clock.
8 Eastern time.
You are still in time. Ms. Jordan, you want to read the next one?
The rider in a whole life policy that allows the company to forgo collecting the premium if the insured is disabled is called
The waiver of
Waiver
premium.
of premium.
Hey,
waiver
waiver
of
of premium.
Hey,
Correct. I sent you a text, Ms. I forwarded it to you again as a reminder. I was going to call you if you didn't join.
No, don't go. Yes. Let's see the question.
Mr. Des, you want to read this one?
Vision plans will pay for all of the following services except
C.
Eye surgery.
eye surgeries.
it's an okay. That's is pretty. Yes. Okay. I start.
Ms. Ebuku Nolowa, you want to read this one?
Yes, an insured pays an annual premium to his insurer. In return, the insurer promises to pay benefits in accordance with the term of the contract. This is called consideration.
It's consideration. Hey, that's true.
Correct. Mr. Oluwatosin, you want to read this one?
Okay, so an agent is in the process of replacing the insured's current health insurance policy with a new one. Which of the following would be a proper action?
C.
C. The old policy stay in force until a new policy is issued.
Correct. Next. Ms. Lola, you want to read this one?
Elimination. Okay, in a disability policy, the elimination or waiting period refers to the period between
B.
the first day of the disability and the day the insured start receiving. Yeah, that's
B.
Yeah.
B.
B.
Here we did
Not
this
by this
question again.
question.
This question again.
Yeah. A is probability, probation rather. B is elimination.
Okay, yeah, probationary
Probationary period.
period. Yes.
Yeah.
Correct.
We really had a tough time with elimination period yesterday.
Well, you guys have mastered it.
We have to.
We had to do it by force.
We don't want any public flogging by Mr. Valentine.
Miss Ebuku Nolowa, you want to read this one?
Yes. Insured this health insurance policy year begins in January. His policy contains a carryover provision. We saw this yesterday. In November, he has a small claim which is less than his deductible. Which of the following is true? We saw it yesterday.
Carry C.
Carryover to next year. Which
C.
will
C.
satisfy.
C.
I think it's
The
C.
insurer may carry over the amount of
Yes,
this.
no.
Yes.
It's C.
We wondered why the carryover was there. It's C.
It's C.
Remember, you were asking a question, why the carryover? What is he going to carry over?
Yeah.
Next. Mr. Des, you want to read this one?
Which health insurance provision describes the insured's right to cancel coverage?
Renewal.
Provision.
What provisions? Policy renewal provisions.
Yes.
Hold on.
It's tricky. Sometimes
Okay.
when we want to go for cancellation,
Yeah, okay. You know, they use the word, normally they may say policy renewal provisions, but he said renewal provisions. So
provision,
we have
yes,
to be
sir.
careful not to think it's policy duration provision.
Correct. Okay. Ms. Ebuku Nolowa, you want to read this one?
Yes. Which option is being utilized when the insurer accumulates dividends at interest and then uses the accumulated dividends plus interest and the policy cash value to pay the policy up early?
Pay
Uh,
up, pay
paid
up,
up, paid up
paid
option.
up
Paid up
Paid
option.
up option.
Yeah, easy. Yeah,
Correct.
addition option. So,
Great. Ms. Geraldine, you want to read this one?
Insurers may change which of the following on a guaranteed renewable health insurance policy?
They may change it by rate by,
Individual rates.
they may change by,
It changes
is that not by
the
class or by
guarantee.
individual?
average.
Guaranteed renewable health insurance.
So let's eliminate which ones we want to eliminate.
Class an individual. And no changes are permitted.
Okay.
Is it by
So
coverage?
Mm,
Is it rates by class? Isn't that like group?
okay.
Mhm.
so the answer here is going to be either A or D.
Mhm.
Okay.
There will be.
Yes.
Oh, wow.
Yeah.
Okay.
Yeah, by
Can we
class.
see?
You know, if there are smokers, if there are
Oh, okay. And
all that.
Correct. Ms. Geraldine, you want to read this one?
I have food in my mouth.
Which of the following statements is true
Ebuku,
concerning the accidental death rider?
A.
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 Double or
yeah.
triple face
Triple
value.
the face value, yes.
Okay.
Remember yesterday they spooked us with that. We thought it was double when
That's right.
Yeah, we've read something like this today already. The 90 day.
$200. That's true.
Ms. Ebuku Nolowa, you want to read this one?
Yes, an insured has a $1,000 HRA account through his employer. He incurred $750 in medical expenses the first year of the plan. How much, if anything, will the insured be able to roll over towards the next year's expenses?
250.
Roll over.
Like
I think
250.
zero.
250.
Roll over. You might not be able to roll over if it is not rollable.
Is it by the
So it's
permission
either
of the
250 or
Is that
zero.
the
So
employers? It's
Zero,
either
yeah.
250 or zero.
Zero.
by answering this question, we'll find out if employees are able to roll over money in HRA.
That's reimbursement.
50. Let's choose 250. I think I've said it before.
Okay.
Is at the employer's discretion.
Oh.
Yeah.
at the price discretion, yes. But we
1 minute.
answered
1
correctly.
minute, sir.
Go ahead.
Okay, sir.
So at what point do we know if it's rollable or not?
Employees are allowed to roll over unused balances at the end of the year. So it is this scenario. The employee would apply 250 the next
Yes,
year expenses. Okay.
but it's
Okay.
not in all cases.
That's
I
HR.
think if it's a FSA account, it's not allowed. You either use it or you lose it.
Or you lose it,
That's
yeah.
is it
No, for
HSAI?
FSA, you can roll it over.
Not all FSA.
All FSA.
Oh, let me see. FSAs?
Mm-hmm.
Let's
Okay.
go up and see if it's FSA. Let's see
It's
the
No,
question
this is
again.
HRA.
It's
This is
HRA.
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 Okay.
That's a reimbursement account.
I know, like end of December, you see patients rushing to use whatever, buy whatever they can buy, because they can lose their.
Okay. But so we know specifically for sure for HRAs, they can roll it over. Miss Lola, you want to read this one?
Which of the following statements is correct concerning taxation of long-term care insurance?
Unskilled laborers, workers of the native people who would have been subjugated.
We saw this yesterday.
I'll say B.
I can't remember seeing this.
Premiums are not deductible. Premiums are not deductible.
That's A, not B. Is it A or B?
Yeah, I'm looking at the B2. B2
Okay.
are taxable
Benefits are taxable on ordinary income.
as ordinary income.
For
Excessive benefits may be taxable.
May not be taxable as ordinary income. Not.
Between A and B.
Excessive benefit may be taxable. No, it doesn't have to do with excessive. Premium may be taxable as income.
I know premiums are not
May
deductible.
not be deductible in any case.
Okay. Remember, I always say be suspect of extreme answers. Extreme answers are always not true.
Okay.
So A we eliminate. C says premiums may be taxable as income. Do we ever tax premiums?
No.
No.
So we eliminate A and C. So it's between B and D.
So we choose B since B is saying excessive benefit. I mean, D is saying excessive benefit.
Wow.
Wow.
Yeah, the word excessive gave it out.
Same like extreme too.
So let's read the rationale.
Remember, when the question exaggerates, when the sentence exaggerates, that's the answer.
It says, regardless of whether or not the insured can deduct individual long-term care premiums, the benefits are received income tax-free by the individual. Excessive benefits are determined by statute. Excessive benefits as determined by statute are taxable as ordinary income. Generally, the benefits for a long-term care policy are payable up to about $12,000 a year. That's if you have like $1 million policy. Excessive after that, they might be taxable. Up to that $12,000 might be received tax-free. Yeah. The benefits are usually a percentage of, that's the monthly benefits are usually a percentage of the death benefit. Like some cases might be 2%, other cases might be 4%. But if it exceeds the 12,000, then they cap it at the $12,000. Mr. Oluwatosin, you want to read this one?
Which of the following statement is not true concerning Medicaid?
B.
Yes.
Do we have any part A, B, C, or D?
It is Medicare. That is Medicare. Yes, you're right, ma. It is funded by states and federal taxes, yes.
Correct. Mr. Bukunolowa, you want to read this one?
Yeah. An insured purchased a 10-year level term life policy that is guaranteed, renewable, and convertible. What happens at the end of the 10-year term? Can it be D?
I'm thinking A. You still have to pay some premium.
Premium will be based on the attained age now. Okay.
Thinking A too.
D, if it's going to do that, will it still improve?
Miss Geraldine, what answer did you give?
I did A.
All right. So it says an insured purchase a 10-year level term. That is, the first part says guaranteed renewable. Remember, whenever you have the guaranteed renewability rider, you will not need evidence of insurability.
True.
Okay.
And it can be convertible. So the answer A says the insured may renew the policy for another 10 years, which is true, but at a higher premium rate, which is also true. Let's look at the other ones and see why they are not correct. The insured may only convert the policy to another term policy. Not true.
No.
They say convertibility. C says the insured may renew the policy for another 10 years at the same premium rate. Not true.
Not true.
It will be renewed at the attained age. D says the insured may provide evidence of insurability to renew. Again, not true. It already has guaranteed
convertibility. Okay.
Renewability and convertibility.
Hey, thank you for clarification.
Okay. Ms. Geraldine, are you available to read this?
Sure. Under the privacy rule for HIPAA, protected information include all individually identifiable health information. Health in any transmitted form. A.
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 Correct.
This is right at the back of my neighborhood.
Yeah.
It's easy to grasp.
Yeah, right.
Ms. Ebuku Nolowa, you want to read this one? Ms. Ebuku Nolowa, are you there?
Yes, I'm here.
All right.
Which of the following provisions will prevent an insurance company from paying a reimbursement claim to someone other than the policy owner?
Let me see for now.
The entire contract.
Entire contract clause.
Following. Or change of beneficiary.
We saw this question yesterday, but it was not like this.
Hold on. Why did you choose that one? Why did we choose B?
Okay, so let me do elimination, all right? Entire contract clause is too broad. They are talking about a specific provision.
Okay.
All right, so I eliminate that. Proof of loss, the which would prevent insurance company from paying a reimbursement to someone other than. Proof of loss is not really talking about why they would pay to somebody or not. It just says I eliminate it. Change of beneficiary. They're talking about a reimbursement claim, not a death benefit.
Okay.
So we eliminate that. So the only one that is standing is B. The only other answer that comes close to B is A. But I think A is not, it does not match what they are asking. Again, let's go to what they're asking. Which of the following provisions would prevent an insurance company from paying a reimbursement claim? to someone other than the policy owner. The provision that can have such a clause is the payment of claims. Not beneficiary, not entire contract, not likely proof of loss. But let's see.
Could be.
Yeah, we saw the same question yesterday and was that same answer, but I didn't think the question was worded like that.
It wasn't worded like that.
All right, so let me reason it out again, okay? It's which of the following provisions would prevent an insurance company from paying a reimbursement claim to someone other than the policy owner? So you go policy owner. So you go through elimination. Let me start with D again. The entire contract clause. The entire contract clause contains what? A copy of the application, the insuring clause. It contains a lot of things. But when they're talking about a provision, they're talking about a specific provision. That's why I eliminate entire contract clause. Change of beneficiary is talking about payment of a death benefit. We're not talking about the payment of a death benefit here. We're talking about reimbursement of a claim. And if you are reimbursement of a claim, it means that claimant is still alive.
Yes.
Eliminate C.
Reimbursement
We're
of
now
a
left
claim.
between A and B.
Okay.
A says proof of loss. Now, a contractor talks about proof of loss. It's not really talking about why the insurance company would pay the insurance claim to somebody other than the policy owner. It's more talking about what kind of things do you need to prove that loss, or how much duration do you have to prove a loss?
Okay, Mr. Valentine.
Yes.
We can see what gave away the answer. He said that the company. He says paying a reimbursement claim.
Correct.
All right, paying a reimbursement claim gave us the answer.
Correct. Correct. Yeah, payment of claims.
Oga Valentine, are you recording this thing?
Yes, it is.
Okay, good.
Yep. All right, let's go to the next one. Mr. Oluwatosin, you want to read this one?
Yes, sir. Underwriting is a major consideration when an insured wishes to replace their current policy for all of the following reasons except
chapter marks on the empty shelves.
D.
D.
premiums all stay the same.
Policy doesn't system.
Correct.
Yeah, that was wrong. Yeah.
Mr. Des, you want to read this one?
Hospital indemnity. Hospital indemnity hospital confinement indemnity policy will provide payment based on
D.
D.
Number of days of confinement.
Number of days of confinement in the hospital.
Yes.
Dr. Desmond drew this one into us yesterday.
Yes.
Correct. Let's go to the next one. Miss Ebukun Nolowa, you want to read this one?
Yes. To attain currently insured status under Social Security, a worker must have earned at least how many credits during the last 13 quarters? 40.
40.
Wait, 40. Is it
40 credits.
Is it 4 quarters per 4 points per quarter?
It's not 40.
It's 6.
6
It's
credits.
6 credits.
6.
At least.
At least, okay, 6.
At least 6.
At
yes.
most, it's 40 credits.
They got us on this one last time.
Yes.
That's correct.
Yeah. It's partial. Yes, partial.
If it's fully insured status, then it's 40 credits.
40, yes.
Okay. Ms. Geraldine, you want to read this one?
Prospective insured receives a conditional receipt but dies before the policy is issued. The insurer will
not pay. A.
would not pay. It's A.
Before the policy is issued. Yeah, it's A.
This question is
They-
kind of
they-
funny
hold-
because it
they
doesn't
use
Hold
the
on a
word-
anything.
second.
They use the word prospective insured.
So it's
So
not yet
it's-
uninsured.
Yeah, but they don't say
yes.
anywhere they can reimburse its premiums.
I would like for you guys to read quietly and read through all of those answers quietly. I'll tell you it's not A. So read.
I think it's C.
Maybe it's C.
I think
Only
the answer is C.
No.
if he would have issued the
Pay
policy.
only if it would have issued the policy, which is true. Again, they say a prospective insured receives a conditional receipt. What does conditional receipt mean? It means a condition needs to be fulfilled.
It will be fulfilled, yes.
Correct. And if he's receiving a conditional receipt, it means payment has been made.
Mm-hmm.
Yeah.
So the insurer will, C says,
C.
pay the policy proceeds only if it would have issued the policy, which is true. If you would have issued the policy, it meant that then the condition would have been satisfied.
Mm.
Yes.
The FBI asks the U.S. Army to run a trace on the rocket serial number. According to
Okay.
Rodriguez.
Mr. Des, you want to read this one?
Which of the following is not an example of a valid insurable interest?
C.
Debtor
A.
and the creditor.
D.
Hold on.
A.
Employer,
Okay, child
employee,
in the
business partner,
parents'
of
life
each other's
is
life.
A.
yeah.
Child in parents' life now. Sit down. Does the
D.
child insure? Can the child insure parents? Oh, it's not.
Yes, I think
B.
A.
Oh, it's
Employee.
Employer in key employee's life.
Of course now.
there's insurable interest.
Yes,
Employee in
now.
a key
Oh,
employee's
okay.
life. There is.
That's
yeah,
Business
yeah,
partner
debtor
and each other's
is
lives.
debtor in the life
Debtor
of
in the
Debtor
life
in
of
the
the
life
creditor.
of creditor. Yeah.
That's not
the
the answer.
creditor in the
It's-
life of the debtor.
Yeah.
Yeah. So
Debtor
the
Ah,
switch
in
is
the life
around.
of
So
the
it's C.
No, what about the child? Does the child have?
Does a child have an interest in parents' lives?
Yeah.
Yes.
A
Can
child.
Family.
sure.
Yes.
That's
Yes.
family.
If you have a
Family.
grown parent, like old parent.
Is it child in that context or child under 18?
Child like children, like baby, like 5-year-old.
Geraldine,
No, a grown child,
Geraldine,
adult.
let me ask you a question. Am I my mother's child?
Yes, you are.
Does that answer your question?
Mm-hmm.
All right.
So it's C.
The
That
key
looks like-
part to when you get to this question, this C, read life of the creditor. Life of the creditor. The debtor does not have any insurable interest in the life of the creditor. It's the creditor that has an interest in the life of the debtor.
Try to the depths.
Life
No,
of the debtor, not life of the creditor.
Yes.
See the confusion they try to put in people's head.
Correct.
And they're there running for time and instantly.
Ms. Geraldine, you want to read this one?
Sure. All of the following qualify for Medicare Part A except
C.
C. Not anyone willing to pay the premium.
Correct. Ms. Ebuko Nolowa, you want to read this one?
Yes. An individual has been diagnosed with Alzheimer's disease. He is insured under a life insurance policy with the accelerated benefit rider. Which of the following is true regarding taxation of the accelerated benefit? I think it's D.
Hold on. Let's do some elimination here.
Okay.
Let me ask Ms. Ebukun Nolowa a question.
B.
Is D not for debt when you're dead?
Let me ask Ms. Ebukun Nolowa a question. They say, which of the following is true regarding taxation of the accelerated benefits? Have we put that money in an account that is earning interest?
No.
Oh, okay. So it has no interest.
Thank you.
So it should be B.
That would be B.
Our benefit will be received tax-free.
I still will not go for B.
I won't go for B.
Oh, really?
I'll go with A.
Correct. Again, for an accelerated benefit,
Okay.
up to a certain limit might be received tax-free. If they say terminal illness, okay, they say terminal illness, then you know everything is tax-free. Apart from terminal illness, let's see.
Okay.
Apart from terminal illness, if they are talking about long-term care or accelerated benefit for Alzheimer's, Parkinson's, all of those, there's a certain limit that you can receive of income. If you go above that limit, then remember, Alzheimer's and Parkinson's are illnesses where you are not able to perform your daily living activities.
Yes, okay.
So, and we are speaking now towards long-term care.
Yes.
Any illness that you see that you're not able to perform 2 of the 6 of those active daily living activities: walking, dressing, eating, bathing, transferring yourself, continence, those 6. If you cannot do any 2 of those 6, then you qualify for long-term care or chronic illness rider. And so, but there's a limit on how much you can receive. But if it's terminal illness, which means death is going to occur within maybe 1 or 2 years, it means that that money is already coming. So it's going to continue. So give me just a quick minute. Give me just a quick minute, guys. Let me answer it, and then let me go to the next question. Des, you can read it while I answer this call quickly, okay? Just a minute.
Move up a little bit. Okay. An internal revenue code provision that specifically provides for an individual retirement plan for public school teachers employee is
C.
D.
403B plan
C.
TSA.
C.
C.
D, yes, plan.
Is
Public
D?
school.
C as in Charlie.
Yes.
C, yes.
Oh, hold on.
D is for
That's a
self-employed.
403B and TSA, right?
Yes.
Yes.
That
See that
public
P,
school.
I see that
D
B,
is
I
for
always think of
self-employed.
public. B
No.
for boy.
the B is for small businesses.
Yes.
Yes.
And D
D
is
for
for
self-employed. Self-employed.
self-employed.
Yes. Roth is
Rotary is anybody. It doesn't have
Anybody. So it's C as in Charlie.
qualified.
Yes.
Yes.
Yeah.
Agents decide it wants to watch in the Cuban room. They suspect their visit has been reported to the macheteros, who won't go near.
Correct. Let's go to the next one. Before we move to the next one, just a minute. Somebody just joined, but it seems as if the person joined and then got out immediately also. So yeah. All right. So 59 Ms. Ebuku-Nolowa, you want to read this one?
Yes. Which non-forfeiture option has the highest amount of insurance protection?
Highest protection is extended term.
Extended term.
It's extended term.
Correct.
Yeah.
Term insurance, I thought,
We learned this yesterday that term insurance gives you the highest.
okay, highest
protection.
production, but not the highest value. Okay.
Yeah.
Okay. All right. That's
Correct.
true.
That's the only two extended non-forfeiture options here are extended term and reduced paid up.
Speed up.
Decreasing term is not an extended
Non-forfeiture option.
It's not a non-forfeiture
Yes, sir.
option, and conversion is not either.
Yes.
Mr. Des, you want to read this one?
Which of the following would basic medical expenses coverage not cover? Surgeon's fee.
Yes.
Hello? Or is it hospice?
Sorry, yesterday. Surgeon services.
Surgeon services.
But I'm looking at medical illness.
Yeah, that hospice there is just throwing everything up the place, man. This thing. Basic medical.
We need to go for mental illness, but I think
Yeah,
they
I'm
have a
looking at that
stent.
mental illness too.
Huh? You said, ma?
I said I was also looking at that mental
Oh,
illness too.
well, we saw something like this yesterday that it was surgeon service.
So which one are we settling for, guys?
But I think medical illness they cover medical illness to certain limits or something.
Yeah.
I don't know.
I'm just thinking, go ahead. See, we're right.
Yes, was right.
Yeah.
Let's read that question again and focus on that answer so that we don't miss it in the test.
Mm-hmm.
And bring peace to this troubled island. A Puerto Rican terror group known as the terrorists, an unpopular war for independence, attacking local police, the American military.
61 here. Ms. Geraldine, you want to read this one?
Yes. Which is true about a spouse term rider?
That's usually it's for is it a A or D? The rider is a decreasing term.
Why is it a decreasing term?
Okay.
It's not a pretty lie.
Because now it's temporary one. So at a certain age, I think the rider will stop. I can't figure my head around it. But I know it's either it's a level term insurance or decreasing term. I think I've seen something like that.
Yeah, I think the rider is usually a level term.
Okay.
But why did they add the age, 75 age? Does it make any sense?
Yeah, it's to certain age, the term policy will stop. The spouse term policy will not continue again. So but I'm not sure it's 75. It's not 75.
And
Yes.
it's not allowed for an unlimited time either.
No, it's limited.
All right, so let's do
The term-
elimination here, okay, guys?
Okay, sir.
Which of the following is true about a spouse term rider? The rider is decreasing term insurance. Is that true?
When I think of decreasing term, I'm thinking of mortgage.
Okay, so it is not.
Okay.
You're right, Ms. Ebukuno, it is not. So we eliminate that. Coverage is allowed for an unlimited time. Is that true?
No.
No.
Not true.
Okay, we eliminate that. Coverage is allowed up to age 75. Is that true?
No.
It's not
I don't
75.
know.
It's like 65.
Yes, it's not 75.
Which leaves us with what?
A.
A.
Okay.
Wow.
Yeah.
That logic applied very well.
Elimination.
Sure.
Miss Geraldine, you want to read this one?
Which of the following is not a feature for a non-cancelable policy?
Cancelable.
Non-cancelable.
Mhm.
Agent Paul, in an effort to determine the new person's identity. If possible, agents retrieve objects the person has touched and send them to the lab to be fingerprinted.
Is non-cancelable. What does B is B sounding to be a reasonable statement?
He says may terminate the contract only at renewal for certain conditions, and it says it's non-cancelable, so you can terminate it.
Piece together through careful coordination of the physical surveillance laws.
I think C is not true.
Correct, you're right. They say the
Yeah,
premiums cannot be increased beyond the amount stated in the policy. What do we know about non-cancelable policies? How can that premium be increased?
By age?
Okay.
No.
It's not by age.
We just went through a scenario earlier.
Okay.
For non-cancelable or guaranteed renewable, see, non-cancelable is the same thing as guaranteed renewable. What is the only reason to increase the premium, or how is the only way by which the premium can be increased? By class.
Okay, yes.
C says the premiums cannot be increased beyond the amount stated in the policy. That's not true. They can increase it for the class. Oh, that one got us.
Yeah. So
That was the question I
yeah,
was
that was
asking.
what we're thinking, that
That's what I was saying.
how can you say you may terminate when it says it's non-cancelable?
They are trying to say you can terminate it for non-payment of premium.
This question.
Let me look at that answer again.
Something.
Sequence of the numbers. It wasn't an easy cut. It wasn't like
This is
didn't
tricky.
say for premium. It
This
didn't
is
say that.
tricky.
It
The
said
certain conditions that they are talking about is age 65. Let's go read that question again. It says, which of the following is not a feature of a non-cancelable policy?
Mr. Valentine, this is what they want us to take, and we can cram it and agree that that's what they want and move on.
No, God help us to remember though.
Indirectly, they are asking for the future of a cancelable policy.
Yeah, it's non-cancelable.
Non-cancelable, so you can't terminate it.
You can't terminate it. That was my rationale in choosing it.
Yeah.
Does that mean the premiums premiums cannot be increased beyond a stated amount of the policy? Is that true?
It's already a non-cancelable policy. So that rule of non-cancelability overrides any other thing, any cancellation. That's what they're saying in the explanation. Let's accept it and cram it.
It's not a feature. The insurer may terminate the contract only. So they are basically saying they cannot terminate it.
You cannot terminate it because it's already a non-cancelable policy.
Okay.
I thought we saw another question before.
How about if the insured does not pay their premium?
I think that would be the only reason why it can be terminated.
But
Other
they
than
didn't
that,
tell us that. That's not in the question. In the
yeah, but that
question.
wasn't stated. You only said a condition.
Okay. Let's go. Ms. Ebuko Nolowa, you want to read this?
Yes. An insurer would like to add a provision to its individual health insurance policy. This particular provision would be consistent with uniform provisions. Which of the following is true?
I would think the provision would be allowed as long as the state approve it.
By the state, me too. Or is I for me, I'm thinking between B and C.
It could be between C and D.
Oh, okay, that's true too.
Surveillance until it gets enough evidence to convict the Macheteros of the big sleep heist.
Yeah.
One of those ones that I had to go by.
So
I'm thinking D too.
Because we agree that first, do we agree that it has to be approved by the state? If we
Yeah,
agree
because the
that they will
state makes the
eliminate A
law.
and B. Yeah?
State makes the law.
I'm
Okay,
thinking
so
like
we eliminate A
that
and B.
D. Yeah, I think that D works better since.
Okay, let's see. If not, we learn. Mr. Valley, can we go?
So you got, which one did you guys choose?
Settle on D.
I'm more certain with C, but let's choose D since that's what everybody's saying.
The agents fixed the broken microphone and prepared to leave. Suddenly, Agent Candelario gets an urgent message.
All right, so it's either C or D. You will see.
Wow.
Told ya.
As long as. Let me tell you guys a scenario that you just, when you get to this question, remember this scenario. If you're at a traffic light, you're driving towards the traffic light, it is red, but the cop is telling you to go, go, go. What do you do?
Because he says I should go, I should get out of the trouble. There may be trouble behind me, I don't know. I should pass because I'm giving he's the authority there telling me to go, I will go.
The cop is the state, as long as it is approved by the state.
Yes.
You can beat the red light.
Oh, okay. What if it was a setup?
Well,
no, the state does not set you up that way.
I'm glad you said that now. I need you to go back by this camera that you put in your car. He sees what is in front and what is in the back. If the cop says that and you pass, you got him. That camera is not too expensive. It's about $30-something. Just put it in your car. He sees what goes on in front. He sees what goes on in the back. Whenever anything happens, whatever story they tell you, bring a picture out and everybody know they are wrong.
All right, let's look at this one. Ms. Ebuko Nolowa, you want to read this one?
Yes. Which of the following is true about the requirements regarding HIV exams?
B.
B.
Yeah, B.
B.
Correct. Mr. Oluwatosin, you want to read this one?
Okay, sir. The sole beneficiary of a life insurance policy dies before the insured. If the policy owner fails to change the beneficiary before the insured's death, the proceeds of the policy will go to
A.
the insured estate.
Yes.
We saw it yesterday.
Okay.
This is they don't know if it was up there.
This is correct.
Agents watch cigar go out at night to make phone
Ms.
calls.
Geraldine, you want to read this one?
In the life settlement contract, whom does the life settlement broker represent?
Is that not the insurer? The insurance company?
Taking the insurer too.
They say a broker represents the insured, while the agent represents the insurance company and the broker represents.
But we're talking about a life settlement contract here.
In a life settlement contract,
It's either it's either the insured
Insurer.
Or the owner?
or it's either the owner or the insurer. Insured would have been a better example, a better comparison here. Let's see. Yeah, it's the owner.
Mm.
Mm.
Yeah, that's true. Broker. Okay.
The broker represents. Okay.
They represent only the policy owners.
Mm-hmm.
Okay. Miss Lola, you want to read this one?
a rider that may be attached to a life insurance policy that will adjust the face amount based upon a specific index, such as the consumer price index, is called cost of living.
Cost of living rider. See.
On his mistress's phone, investigators know that Segata plans to return soon. The 10th week passes. Finally, Segata leaves a message on her answer machine. It tells her, I'm in Dallas, and here's my phone number where I can be reached.
68. Mr. Oluwatosin, you want to read this one?
Okay, sir. A partnership buy-sell agreement in which partner purchases insurance on the life of each of the other partner is called a
$8 plan.
is this a cross purchase plan?
A and C are out.
Mm-hmm.
In split dollar and cross purchase, whatever cross purchase is.
Okay. I mean, it says the answer is in the question.
Mm-hmm.
Say a buy-sell agreement in which each partner purchases insurance on the life of each of the other partners is called. We know it's not a stock redemption plan. If we know what a key person insurance plan is, we know it is not a key person insurance plan. When we talk about split dollar plan, we are talking about health insurance. So that leaves us with what Ms. Geraldine said. Cross purchase plan. And that's correct. So sometimes you eliminate by knowing what the other terms that are being suggested mean. And you bring them in, and usually they are not going to match with what the question is saying. Mr. Des, you want to read this one?
What is food? Don't give me something to eat.
All right, let me call somebody else. Miss Lola, you want to read this?
Which of the following statements about group life is correct? The policy can be converted to an individual term insurance policy.
What about C?
The cost of coverage is based on the
Position to hit dozens of locations simultaneously.
I think it's C.
C.
That's correct. Question 70. Ms. Geraldine, you want to read this one?
Yeah. All the following are true for the key person disability income policy, except
C. Benefits are considered taxable income to the business.
That's correct. For either a key person or a key person disability insurance, the benefits are not taxable. Remember that. For either the key person insurance or the key person disability insurance, the premiums are not tax deductible. And that's what D says, which is true. Premiums are not deductible to the business, which is true. But the benefits that are paid when there is an incident are not taxable either. Ms. Ebuku-Nolowa, you want to read this one?
Yes. Which of the following is not true regarding basic surgical expense coverage?
C.
Coverage is unlimited.
That's not true.
Leader continue slowly down the stairs. He got the other base of the stairs. He raised his left hand, and the HRT member
Coverage cannot be unlimited. Then
It cannot be unlimited, yes.
Yes, C.
if it's unlimited, then they will cover everything. Then you won't need any major medical.
So which one did you guys say is the answer?
C.
C.
C?
Yeah.
Yes.
Okay. Let me go with your answer.
You're doubting the answer. We're going by your own reasoning. You're the one that told us that if it's too extreme, no, that is not unlimited.
Correct. Correct. All right. After this one, we'll take a 5 minutes break.
Thank you.
5 minutes break.
Almost close to.
Mr. Oluwatosin, you want to read this one?
Okay, sir. Who must pay for the cost of a medical examination required in the place of underwriting? Insurer.
Sure.
Hey, the insurance.
Well, let's go on to question 75 before we take the break.
That's a low-hanging ripe mango.
Yes.
Ms. Geraldine, you want to read this?
A policy with 31 days grace period implies
Policy will not lapse for 31 days if the premium is not paid when due.
true.
Correct.
a year after his release on bond. His electronic bracelet.
Ms. Ebuku-Nolowa, you want to read this one?
Yes. All of the following would be considered an insurance transaction except Obtaining an insurance license.
D.
Correct.
What we're struggling to do right now.
Yes, you want to read this one?
Okay, interest earned on policy dividends is
B.
interest is taxable.
Taxable.
Correct.
Low line rhyme mango. 2 right.
Going on a break.
All right. Let's just answer this one, then we're going to break. Miss Ebukun Olowa, you want to answer this one?
Okay.
Before she goes.
Which of the following is not a feature of a guaranteed renewable provision? Is not a feature.
Today, through democratic elections, the people of Puerto Rico retain the right to decide whether to become a state, remain a commonwealth, or become independent. Thanks to the FBI, they remain free to determine their own fate.
Is it B?
Coverage is not renewable beyond that. That's true. You cannot renew coverage beyond age 65 for policies. Remember, at 65, Medicare kicks in.
Yes. Yeah, that's why they got me. I wasn't even thinking.
Which are the
The insurance told,
not a feature.
Yes, the insurance told me it's up to 100. I didn't remember I was getting into Medicare, and they canceled the whole thing and took all the money.
Unilateral right.
I think D looks somehow to me. The insurer has a unilateral right to renew. It's though it's guaranteed
one-sided,
renewable.
right?
For the life of the contract.
How about C? The insurer can increase the policy premium on an individual basis.
Did we not see the same question last time that we picked and we failed it? Remember?
Yeah, I'm trying to. That's what I prayed yesterday. I prayed I'm not.
Okay, let's do elimination. We already eliminated B. The insured's benefit cannot be reduced. That's true. Guaranteed renewal, they cannot reduce the benefit. So we eliminate A and B. It's left to C and D. C says the insurer can increase the policy premium on an individual basis. D says the insured has a unilateral right to renew the policy for the life of the contract.
Guaranteed renewable.
Guaranteed renewable.
So it's trying to define.
So they can renew it. So it's C.
Yes.
Yep. Correct.
Yes. D is trying to define guaranteed renewable.
All right. Based on Ms. Ebukun Nolowa's request.
No, it's not my request. It was your promise.
You are very right. I was just trying to hit you.
Can you do this in exam? Can you pause and come back?
Yeah, you can pause and go to the bathroom.
Not in the exam. Well, yeah, in the exam, I don't know. You might be able to.
Yes, I know.
Yeah. All right. So let's return it's 9:07. Let's return at 9:15.
Thank you.
All right.
Thank you so much, sir. Oh my God.
Right now, it's also fatally prone to errors and incoherence. To make quantum
Hello, Damile. How are you doing?
I'm good. Good evening. How are you doing, sir?
I'm doing good. I noticed you tried to join earlier. Who is your mentor?
Mr. Fonga.
Oh, Mr. Fonga is your mentor.
Yes.
All right. Well, you are in the right place.
Yeah. Thank you so much.
So you're starting to take your exam, right?
Yeah, I took it already. Then I failed. So he recommended the class to me.
Okay. I'll send you some videos to watch, and I'll send you copies of this exam that we are taking, okay?
Oh, all right. Okay, sir.
All right.
Yeah, thank you so much.
So we're going to resume some questions, and we might go like for another hour or so. So just hang in tight.
What I said last week, the volatility.
Okay. Remember, we told you yesterday that when the boss comes, he will guide you. So you heard it from the horse's mouth now, right?
Yes, I do.
All right. So, Mr. Damile, if you don't mind me asking, which country are you from?
I'm from Nigeria.
Okay. Okay. Which part of Nigeria?
I'm from Ibadan.
Okay. Okay. So you are from the great people of the Yoruba tribe, right?
Yes, I am.
All right. Of
Thank
course.
you so much.
Yes. Yeah. All right. So
in that perspective, everybody's great too.
I understand. The Fulanis are great. The Igbos are great. The Ijagams are great. The people from the Niger are great. Of course, the Yorubas are great. Nigeria is full of a lot of great people, you know?
Yes.
All right. So, we'll continue. So, Mr. Damile, what we do is we just call on people to read the question, and then we try to answer it, okay?
All right.
All right. So let's start this one with Miss Geraldine. Miss Geraldine, are you back? Okay.
Somebody else can read.
Mr. Desmond, you go ahead.
An investor buys a life policy on an elderly person in order to sell it for a life settlement. This is an example of.
Is it
not a
vertical settlement?
Is it Stoli? I know vertical is for terminal illness.
Okay. Is it not with the third person trying to buy, this person buying it, is it possible to assume it's a third party?
It could be vertical actually.
Yeah, this is okay. So let's go by elimination just to warm ourselves up, right?
Okay.
Let's start with D, pre-arranged funeral plan. This has nothing to do about pre-arranged funeral plan.
Mm-hmm.
Yes.
We junk
vertical.
We junk it. Let's say vertical settlement. A vertical settlement occurs when you buy a policy and you want to sell that policy via a viator, but I think for a vertical settlement, that person must be terminally sick for it to be a vertical settlement. If that person is not terminally sick, then it's a life settlement plan, like we saw like 5 questions ago. So that's the difference between vertical settlements. For a vertical settlement, that person must be terminally sick. For a life settlement contract, that person does not necessarily need to be terminally sick. So they say a life insurance, an investor buys a life insurance policy on an elderly person in order to sell it for a life settlement. This is an example of. So that eliminates vertical settlement. Okay. Okay.
What is a Stoli policy then?
Okay. Let's look at B. A Stoli. What does Stoli stands for? Stoli stands for stranger originated life insurance. stranger originated life insurance. Let's go again to the question. It says, an investor buys a life policy on an elderly person in order to sell it for a life settlement. Now, this looks like a stranger originated policy, but it doesn't tell us if there is any, what is that term? What is that relationship that must exist between the owner and the insured?
Insurability.
It doesn't tell us if there's an insurable interest or
Interest.
not.
Insurable interest.
So it just leaves us floating. Is that does that investor have an insurable interest in that elderly person? It doesn't tell us. But what we know for sure is that it is a third-party ownership. Because it's one person buying a policy on the life of another. Without any doubt, it is a third-party ownership. Whether that third-party ownership is a stranger-originated life insurance policy or not, we do not know. Let's see if our analysis is right. It's not right.
That's right.
So, Estoli.
So they want us to see as a stranger because maybe the key word there is investor. It's a stranger-oriented life insurance policies are usually purchased by people who have no relationship with the insured, with the intention of selling them for life settlements. So this is an example of Stoli. But what I don't like about it is that they did not tell us if there was insurable interest or not. They want us to infer that there is no insurable interest through that word investor. But this
good lesson.
Good lesson, yes. All right. Ms. Ebukun Nolowa, you want to read this one?
I have food in my mouth.
Which of the following statements about the reinstatement provisions is true?
It's still not to pay all overdue premiums with interest before the policy is reinstated.
Can it be reinstated though?
Yes.
Yes. Yes. A policy can be reinstated again based on what you asked Ms. Ebukun Nolowa. Let me explain this. C says it permits reinstatement within 10 years of the policy. Usually reinstatements can happen only within 3 years.
3 years, yes, that's not true.
B says it provides for reinstatement of a policy regardless of the insured's health. Not true.
Yes.
Usually when you are doing reinstatement, you have to go provide evidence of insurability.
Yes.
You want to make sure that you haven't let your policy lapse and then you've had some health condition and you're coming back to get that policy. A says it guarantees the reinstatement of a policy that has been surrendered for cash. Whenever a policy is surrendered, it's buyback, gone. It cannot be reinstatement. That leaves only D. It says it requires the policy owner to pay all overdue premiums with interest before the policy is reinstated.
Okay.
Correct. Somebody else joined that I wanted to ask.
Yeah, something Barua.
Yes. They joined, they were in and out.
I think it's still Mr. Damilari.
Okay. All right. So let's proceed.
That's where we roll.
Mr. Damile, do you have the
Damilari.
It's Damilari.
Damilari, okay.
Okay, yes, sir. Yeah.
Getting correction from somebody with the Yoruba tongue. I appreciate that. Damilari. Damilari, okay.
Yeah.
See, I'm pronouncing it with a French accent, Damilari.
Does that mean God answer me?
God has
God just
vindicated me.
vindicated you.
Amen. God has answered me. Amen. He will
Very
always answer you in Jesus' name.
Amen. Amen. Mr. Dami Alare, can you read this one?
All of the following statements are true regarding installment for a fixed amount, except A, the option.
So you read just the question and then we reason it out silently.
All right, okay. All of the following statements are true regarding installment for a fixed amount, except
I think C.
Yeah, C is correct.
Yes,
It's not.
I
It's
agree
not.
with
It's
you.
not pure life. It's not. So when before the amount is exhausted, if he dies, the beneficiary will take the remaining.
Or the
Okay.
estate, yeah.
Yes.
Correct.
14 banks in the honor.
Mr.
You're
Damilare,
going to be one of the instructors
if
soon.
there's any question that you don't understand why we are choosing the answer, ask us to explain and we will, okay?
okay, sir. Well
Yes.
understood.
Our leader tells Special Agent John Tambler that she feels safe to talk because Chubbuck's left the area.
Okay.
During the course of the interview,
Let's keep going because we're going to finish the test. It's not going to allow us to come back tomorrow.
Mr. Des, you want to read this one?
Which of the following entitles, which of the following entities has the authority to make changes in an insurance policy? Which of the following entities has authority to make producer? No. Department of Insurance? No. Broker?
Producer.
The producer.
Producer.
The producer is not the agent. I think it's insurance
Executive officer.
Insurance executive, because changes in the insurance policy, yes, the insurance executive officer.
Yeah.
So who is the producer?
The producer
Agent.
cannot override the executive of the company.
The producer,
The
okay.
agent also is called
Take
the
a look at this
producer.
way, guys. The producer is us, the agents.
Yes.
Once that policy has gone into effect, which is what they are saying, which of the following entity has the authority to make changes to an insurance policy? Once that policy has gone into the effect, we, the agents, we, the producers, we cannot make changes to that policy.
Okay.
Yes.
So Department of Insurance is out. Broker, similar to the producer, is probably out. Insurance executive officers, probably.
Yes. The broker works for the policy owner.
Correct. But they say the insurer must have the insured's written agreement to the change. Okay. Like when we call to make changes to a policy, I have to have the client on the line before they'll even talk to me about making any change. It might be change in how they are making their payments. It might be change to the face value of the policy. And for some of those changes that actually change a material and substantive part of the policy, there has to be a written note with the signature of the insured. Ms. Geraldine, you want to read this one?
What is the best way to change an application?
C.
Start over with a fresh application. C.
Correct. Start over with a fresh application. The best way.
For the break, they are giving us fresh questions too.
Miss Lola, can you read this one?
What is the maximum age for qualifying for a catastrophic plan? Is it not 26?
I don't know. This is the first time I'm seeing this question.
First time I'm seeing this.
I think
It's either 26 or 62.
I think it's 26.
26, okay.
So
Oh,
26.
Max, I think it's 26, but
26 might be too low.
First, let's define what is a catastrophic plan. What is a catastrophic plan? Let's go from there.
Okay, let me read it from Google.
Or ChatGPT.
Agents send the pregnant woman to a hospital and check it out.
A catastrophic health plan is a low health insurance plan with low monthly premiums, but a high deductible, offering protection against serious illness or injury and covering essential health benefits like preventive care. You must be under 30 or qualify for a hardship exemption to enroll.
26.
So it's 30.
26. Under 30. So it's 26.
It must be under 30. So it's 30 years.
It's 26. Whoa.
Oh, I didn't see 30.
Oh.
I'm sorry, guys. I didn't see 30. All right. But
So we
now
have failed about 8 now.
Correct. Now we know. Miss Ebuku Nolowa, you want to read this one?
Yes. Which of the following named beneficiaries would not be able to receive the death benefit directly from the insurer in the event of the insured's death? It's B.
Minor son of
the insured.
Either they will give it to a trustee or something.
Or a guardian.
Or a guardian, yeah. Trustee or guardian, yeah.
B.
Yep.
Correct.
Yeah.
Okay. Mr. Oluwatosin, you want to read this one?
Okay, sir. If an insurer issued a policy based on the application that had unanswered questions, which of the following would be true? D. The policy will be interpreted as if the insurer waived his rights. Yeah.
Correct. Miss Lola, you want to read this one?
under a health insurance policy, benefit other than death benefit that have not otherwise been assigned will be paid to the
D. D.
Insured?
Yes.
Under a health insurance, benefits other than death. Oh, yes, that's true. We saw it yesterday. That's true. That's true. That's true. It's all that yesterday.
Number 86, Mr. Damilare, you want to read this?
An employee becomes insured under a PPO plan provided by the employer. If the insured decides to go to a physician who is not a PPO provider, which one of the following happen? Which of the following will happen? B.
A.
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 At a higher price.
A.
Yeah.
Oh, higher deductible? Okay.
The people will pay the same benefit. No, that's not true. The people will pay with a reduced, it could be C.
What? It can't be C. Miss Geraldine. PPO. You can go to PPO and to any physician and they will list. The only thing is that you pay
It should be B.
So A is the logical answer because I'm looking at C as
It will be
reduced
higher.
benefits.
I was thinking that Maybe
J
it was
cannot
the
be A,
copay.
and let me tell you why it cannot be A. Because the deductible is baked into the contract.
Mm-hmm.
And whether you go see an in-network physician or an out-of-network physician, that deductible is going to be the same.
Mm-hmm.
Now, the PPO also will have a certain fee that they pay to a doctor, whether it's in-house or out of house.
So B will be more appropriate there.
Yes.
And
Yes.
the client, if you go to an out-of-network, you cover the difference.
Mm-hmm. So B.
I might be wrong, but let's see.
You see why it's reduced benefit? Because I'm thinking that they have their set amount. If you go, they're charging you $500, they will only pay the whatever 200 they're set to pay. That's my thinking.
But Jay, I hear what you're saying, but that answer is misleading because it says the PPO will pay reduced benefits. How about if the out-of-network physician is charging just like the physicians in the PPO?
Yeah, they won't pay the rest, so they expect the person to pay the rest.
If I may say, I used what do they call Excel solution, whatever, to prepare, and the answer they chose was B, that will remain covered even if it goes out of the network, out of the prevent whatever.
Correct.
So
correct.
I don't know what happens in this situation.
Yeah, that's how I came to that answer myself.
You remain who've seen this question before, you remain covered, but you will pay the difference.
Extra.
They will charge you more.
Yeah, but
Yeah,
Jay,
but in Excel,
Jay,
but
let
in
me tell you
Excel,
why the question is wrong. They say an employee becomes insured under a PPO plan provided by his employer. If the insured decides to go to a physician who is not a PPO, they should have said and charges a higher amount than the PPO. That's the condition that they would have put here for this answer to be justified. If they say go to a physician who is not in the PPO and the physician charges a higher amount than the PPO provider, then this answer would have been right. The people will pay a reduced benefit. But this answer, the answer here is actually B. Says the people will pay the same benefits as if the insured had seen a PPO physician.
Well, they have made their choice, Mr.
If you're going by the answer that B is right, it means that you don't even need a list. You can just go to anywhere, they will pay the same, right?
Yeah. So
if we're going by B, it means there's no
don't need a
referral. You can just go anywhere.
Yes.
But when you go outside, they expect that you pay more.
Yeah, you pay a deductible. Yeah, out of pocket, yes.
Yeah, I know that one too, but in Excel, this is what they choose, that B.
The question is not said right.
It may not be the same. It may not be worded the same way.
Which one are they using? Is it
see, like look at the reason
is
they
it
give
Exam FX or Excel? Sorry, ma.
This is
folks.
I'm going. Okay,
see, you look at the answer that the rationale they gave. It's just that they didn't explain. They say the group health plan will not pay for full amount charged by a non-PPO.
Okay.
Which that's what they reduced, but they didn't reward what they think right.
What I'll do is that starting from next week, I'll switch to Excel and let's try Excel.
Okay.
Well, it's nice. Let's keep learning this both ways. When we get there, we look at the questions and we choose.
But since joining yesterday, it looks as if this one is more comprehensive than Excel from my own view.
Okay.
So.
Yeah, Excel can be very, very, very what. Yeah, I studied with Excel, and learning from this one is much better. Let's continue with this.
Thanks for your testimony.
Yes.
All right.
Death benefits payable to a beneficiary under a life insurance policy are generally exempt.
Let's read that question again.
Exempt from taxation.
Death benefits payable to a beneficiary under a life insurance policy are generally.
And the
D.
key word there
D.
is generally.
Generally.
D.
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 If you look,
Not subject
if
to
you look at
income
A, there's a
taxation
limit.
by federal government.
I think D.
D as in Daniel.
Yes, Daniel, they're not taxed.
Only option. So if you make over 10,000, do you pay taxes on it?
The reason why D is the answer is that they say death benefits payable to a beneficiary under a life insurance policy are generally. So generally, they are not talking about any specific case. Generally, there's no tax.
Unless you pay tax when you have gained some interest in it.
Correct. And that's correct. Generally is, see, if you see answers that allow for a flexibility, you know, may, generally, maybe, as reasonable as, those questions always accommodate a certain flexibility. Okay. When premiums are paid with after-tax dollars, the death benefit is generally not subject to federal income taxation. All right. 88 here. Ms. Geraldine, you want to read this?
When a claim is pending, an insurance company
Who's this?
may require.
Who's this?
D. No, not as independent. Can we say C? But I don't know if it's an independent examination.
When a claim is pending.
When a claim is pending. Oh, okay, I see. I think it's 30 days.
I'm not sure between 30 and 45.
Okay. Remember what I said in the previous question. Answers that have maybe, reasonably, as long as.
Claim. Okay. C. I'll go with C.
I'll go with C then.
And that's correct. 89. Ms. Ebuku-Nolowa, you want to read this one?
Yes. An applicant for a health insurance policy returns a completed application to our agent, along with a check for the first premium. She receives a conditional receipt 2 weeks later. Which of the following has the insurer? Which of the following has the insurer done by this point? Neither approved the
C.
Yeah, no, issued the policy.
Although agents chase every lead, Chubb remains elusive.
Correct. Mr. Des, you want to read this one? Or Mr. Damilare, you want to read this one?
Other than for a qualified life event, when can a change be made in benefits for a flexible spending account?
A.
A.
Entered into a task force to aid each other in apprehending fire Chubb. We pulled our resources together so that it would be
correct.
3 different person.
Despite a massive manhunt, Chubb.
Number 91, Mr. Oluwatosin, you want to read this one?
So, the following entities regulate variable life policies except Guarantee Association.
I'm thinking of that too. Guarantee Association.
Guarantee Association.
Correct. 92. Miss Lola, you want to read this one?
The form of life annuity which pays benefit throughout the lifetime of the annuitant and also guarantees payment for a minimum number of years is called
With
life,
period 13.
life income with period setting.
Period setting.
I'm impressed at how well you guys have mastered this. Correct. Ms. Ebuku Nolowa, you want to read this one?
Yeah. Which of the following would be a qualifying event as it relates to COBRA? Qualifying event.
Kind of
Termination.
due to downsizing.
Yes, A.
A.
A. Not for stealing, for downsizing.
Conditions for the
You know, they say stealing is a condition of poverty. In America, like in the workplace, you don't really see stealing a lot.
Thematic stealing too.
Pardon?
There could be systematic stealing.
Correct, that's true. White collar crime. All right. So let's go with this one, Ms. Geraldine.
In the event a policy lapses due to non-payment of premium, within how many days will the policy be automatically reinstated once the outstanding premium is paid?
Days.
Is it 30 days in some states or 45 days?
Or 10 days.
Or 10 days.
Or 10 days.
The key question also to ask here is that are we talking about life insurance or health insurance? If it's health insurance, it's 10 days. If it's life insurance, it's a certain number of days unless death occurs as a result of an accident. So let's assume that we're talking about.
Let's just pick 10 and go.
Okay.
We can't analyze nothing.
Wow,
45 days.
45 days.
That's
life insurance.
If a policy premium is not paid by the end of the grace period and the policy lapses, an insured may pay the outstanding premium and have the policy reinstated. If the insurer does not refuse reinstatement within 45 days from the day of the conditional receipt, the policy will be automatically reinstated. So they are talking here about life insurance, not health.
Grace period advice on the restatement for 5 days.
Mr. Oluwatosin, you want to read this one?
Okay, sir. All of the following statements about Medicare Part B are correct, except is it a compulsory program?
Is it B?
Is it A?
Oh, except.
Except it's a compulsory program.
A. I'm thinking A. Can't be
Yes.
That's extreme too.
Yes.
Correct. Medicare Part B is not
B.
voluntary.
A is voluntary, not B.
I mean, it's not compulsory.
Must have to pay.
Correct.
Yeah.
It says B is elective. Individuals become eligible for Part B at the same time they become eligible for Part A. However, Part B requires that a monthly premium be paid.
Yes, they stated it.
You guys are going to become such experts at these health plans.
Thank you for investing the time and effort in us, sir.
Correct. Mr. Dami Larry, you want to read this?
Why should the producer personally deliver the policy when the first premium has already been paid?
D. D.
Correct. You understand?
Yes, understand. Mm-hmm.
Be persuaded to work for us. Man doesn't want to do it. Worried about it.
Number 97, Miss Oluwa, Miss Ebukun Nolowa, you want to read this?
Yes. The insured under a $100,000 life insurance policy with a triple indemnity rider for accidental death was killed in a car accident. It was determined that the accident was his fault. The triple indemnity rider in the policy specifies that the death must not be contributed to by the insured in any manner. In this case, what will the policy beneficiary receive?
100,000.
100,000.
Correct.
D.
Does anybody not understand why we got 100,000? How we got 100,000?
Because of the clause that it was self-inflicted, it caused the accident. Shouldn't have.
Was not caused by him, would have received 300,000.
Correct. Des, you want to read this one?
Which of the following would help prevent a universal life policy from lapse?
Target premium.
Target premium.
Target premium, okay.
Keep the policy in force.
Correct. Again, the target premium is intended to keep the policy throughout its lifetime. Ms. Geraldine, you want to read this one?
Yeah. When may an insured deduct unreimbursed medical expenses paid under a long-term care policy?
They're convinced Chubb is hiding the truth and persuade the informant to go back in.
That's a hard one.
B.
It's
I guess we
long-term
just go
season,
with
so we'll have to go back and read this thing.
only if the insured does that. When the expense exceed.
Let's do elimination, okay? This is a perfect case for elimination. A says only if the insured does not itemize expenses. That is not true. We know personal individual expenses are only deductible when you itemize. So we kick A out. Let's go to D. D says all long-term care expenses are tax deductible. Is that true?
No.
No. We kick D out. So we've kicked A and D out. We are left with B and C. So let's look at B. B says only if the insured is 65 or older. C says when the expenses exceed a certain percentage of the insured's adjusted gross income. Let's go back to the question. When may an insured deduct unreimbursed medical expenses paid under a long-term care policy?
When? And it says when the expenses. So that may be the answer. C. Or do we?
I think you're right.
That's the logic. When, yes.
You're right.
Okay.
Usually, medical expenses are tax deductible only when they exceed a certain amount. When you're filing your taxes, if in the previous years your medical expenses had exceeded a certain threshold, you're allowed to deduct them. That's correct.
Tavali, I'm seeing something so consistent in FX exams. And I don't know if I say that I will not lead people astray.
What is it that you're seeing?
I'm noticing that there's a pattern here.
Mm-hmm.
Most of the answers that are not very sure, you will notice something that is different there. Go back. Did you see the question that is more longer than every here now? Answer the question. Let's check again and see if this pattern continues. Please don't say Brother Dave said you must follow this pattern, but I'm noticing it is becoming very, very clear as I'm looking at the FX.
Okay, I hear you. We'll continue and see if this pattern holds. But let's read this answer. They say in either medical expense insurance policies or long-term care insurance policies, unreimbursed medical expenses paid for the insured spouse and dependents may be claimed as deductions if the expenses exceed a certain percentage of the insured's adjusted gross income. Yeah. All right, so we have 42 minutes left. I'll plead, I don't know if it's possible, Ms. J. I'll plead that I switch and Ms. J continue. And the reason is that my mom is here, who is not well. She's currently staying at my sister's. I need to go drop her.
Okay, please, let's do that. Somebody else take over, please. Let's.
Yes, and
maybe one person should be reading and we all answer quickly and so that we can get it done.
Correct. So Jay, I'm going to make you the host. Jay, is that possible, first of all?
It's not, but it's okay.
Are you working tomorrow?
I am. It's okay. I'm not feeling myself tonight, but that's okay.
Then, is there anybody who can take over, or do we want to continue tomorrow? Because we've covered quite a lot.
Who was our host yesterday?
Geraldine was.
Oh, okay. Okay, if you guys want us to pack up here, that would be fine.
Correct. And the reason why I really need to go is because she says she's not taking her medications yet.
Mm-hmm.
Okay. Yeah. Go ahead. You don't have to explain, sir. We understand.
Yeah.
These things happen in family.
Correct.
We understand very much.
But I am very impressed by the amount of questions that we covered. Mm-hmm. We covered a pretty sizable lot of questions in one evening. And
go ahead and take care of family issues, please. It's okay.
Okay. Mm-hmm. All right. Well, thank you guys very much for joining. Mr. Dami, I took down your name. I'll search for your phone number and I'll send you the recordings and the classes we've been having.
All right. Thank you so much.
Correct. And to everybody else, I'll try to find some time tomorrow. Tomorrow might be tough because I'm traveling to Dallas. I have some training there with Transamerica. So, but we'll find time, if not tomorrow, Friday, because we have 72 hours to finish this question. So if not tomorrow, Friday.
Okay. No problem. We'll come back tomorrow.
All right. Thank you guys very much. And Ms. J, go get some rest.
Good night, guys.
Right.
This is quite stressful after being on your feet for all day, huh?
Correct.
Yes.
Correct.
Okay. Well, we are our brother's keeper. Let's go ahead and rest.
Correct.
Thank you, guys.
Take care, guys, and good night.
Thank you so much. Thank you so much. We appreciate everything.
All right.
Thank you. Bye.
Good night.